All right, this is Savvy Trader, and this is Thinkorswim platform, and we're looking at coin. So this is Coinbase. So what I'm looking at is on a daily chart, and with my daily chart here, I'm going to zoom. This is a 2-year, 1-day chart. We'll start here, and whenever I'm looking at patterns and I'm trying to set up a trade in a stock, basically what I want to look at is I want to look at everything from that is from my right to all the way to my left. So I'll start all the way back into almost 2 years back, and I'll start looking at the price action and get a feel for what the stock does and what it doesn't do. So right now I have two moving averages. I have a 200 and I have the 50. And up on the very top left-hand corner, I also have 3 labels. One's for the 200, one's for the 50, one's for the 21. And it tells me on the current bar what the slope of those moving averages are. And later on, I'll get into a little bit more detail about what that means for me. So basically, we can see in this 2-year period that we've really had some bullish price action and a pretty decent pullback and a failure of the 50 at this point. So let's look back and see if we could find areas where either the 50 supported the stock or the 50 did not, to give us an idea of what might happen next, especially when we get into the situation of whenever we're trading between these two moving averages right here. And if there's any price patterns that we can look at that give us some clues. Now, I'm going to start with single bar patterns before I get into really trends. I just want to look and see if I can find some patterns that give us an idea of, hey, look, this is something that I've seen in the past that we might want to look for in the future. And the first one that comes to mind is almost immediate, and that's whenever I seen this right here. I seen an area where price was struggling to make new highs, and it looked like we were making lows here, made another minor low, and then another low, and then finally we made a higher low. We started to move up, and this is almost an inverted head and shoulders pattern. Now, the key here is whenever I seen this gap, and after the gap happened, what happened next is we get a pattern where a very bullish bar that brings us off the 200. In fact, price gapped up through. So I want to look at this candle. This candle is very significant because it opened on the low and closed nearly on the high. It looks nearly 95% of the price was retained throughout the day and into the close. It's only got a very tiny wick. And then one thing to also note is if you look and see that the 200 is starting to slope up at this point. And also, it appears to me that price basically off this low, this could have been our stop below this candle low, or the 200, or really the combination of both, because it gives us really a zone right here that we could look at to give us support not only off this low but off the 200 also. Now you notice that we kind of chopped around here for quite a while, and the bulls maintained control of prices, and then we really launched again at the point where we made another bullish candle move up. And once this bullish candle moved up, notice that it held the highs here as it digested the price. And this almost looks like it could have been a flag pattern and then another move up. In fact, in a flag pattern, you can actually take all these bars and put these bars together, and then you can combine them, and then you can start making your flag from here, and you look for a breakout above. But very interesting. Opened on the lows, closed near the highs. These lows were preserved. It created a chop area, and then we exploded higher once we broke out of this little consolidation range with another strong bullish candle, consolidated with these dojis, another strong bullish candle right here, and we really held this candle. We only had a small dip into it. And one important thing I like to look at is when I'm reading price action is how far back do we violate prices in these bullish candles. Now, I'm okay whenever I see this, and ideally I want to see less than a third. I don't want to see really more than half. When I'm starting to get below more than half, and I'm starting to see prices move down lower and lower, I'm almost expecting that we're going to violate the low of this candle, and we're going to start to form another leg down, maybe a retest, and then lower. Once this bullish candle was formed, and we can see that we had more upside but choppy price action moving back inside this bar, and then a continuation up. But what's interesting, near the end of this pattern, look and see where there's any candlestick patterns that really stand out. Now I notice that these are a lot of small candles, so this tells me that, hey, we're kind of digesting this move up, but we're also losing steam. But interesting enough that at the very end of this whole pattern, what happens? We get this shooting star style pattern, which basically is you got a long candle with a small body and then another wick below. And you can see that most of the action on the upper range was pulled back, and that we closed near the low of the day on this candle. Even though it was off the low, look, from the open to the close, there really wasn't much change. And then immediately the next day, we couldn't capture and break above the high. Once we broke this low, that would have been a telltale sign for me that, hey, look, more than likely, we're going to probably want to come back down and test the next moving average, which we can add back to the chart. Let's turn on the 21 and just show the 21 moving average here. So if we look at the 21, we can see where the 21 was, and that's going to be right in this area right here. And you notice that it kind of held price, but then price gapped down through it, and also that the slope of these moving averages started moving down lower and lower and lower. So one thing I do key on is not only the break and movement of those moving averages, but also the slope. And what I've learned by trading, and many years of trading, that it's not only the crossover that's important, but it's also the slope of the EMAs when they happen, when they start to move through. So let's go back a little bit farther in this chart of coin and look for some more price patterns and how we can kind of form a better thesis of, hey, when should we get into these stocks, and when does it look like, hey, this is a bullish pattern that's working, and where some of these bullish patterns start to fail. You can see that on the 200, it's upsloping. The 50's upsloping, the 21's upsloping, but then there's a period of time where everything changes, and that is right whenever this price happens right here. You can see that we had price kind of moving off a level right here, going sideways, and then what happened after it moved sideways off that level, Then it came up to this area right here where it created a high. And it couldn't really forcibly break above these highs over here. It tested, broke through. I could see buyers stepping in here, and then the bears pulled it right back down. And this is not what you want to see on a breakout. This would be right here, in my opinion. This is a failed breakout. We come back and our expectations are we're going to come to the nearest moving average, which in my case it's going to be the 21. And you can see that we fell right through, gap right through, pulled off the 50, and we recovered. But the next candle formations really didn't do anything to push prices higher. And also, there was a point right in here as a clue. The 50's moving up, then the 50 starts to fail. And right when price gapped through the 21 was neutral to starting to go bearish and roll over. And you can see that when the 21 rolled over, just followed the 21 all the way down to where the 21 actually starts to recover and starts to turn up. It doesn't turn up till really right here. It had one candle where it moved up here, but what would have told me I might not want to take that trade is that I haven't gotten a crossover, and a crossover doesn't occur till right here. But also, I'm really fighting. I'm fighting the 50. I'm fighting the 50, which is working its way down towards the 21. The 21 finally comes over and beats it in this area. And when these slopes recover, when the slopes of the 21 recover and start to move up, and the 50 starts to move up, that's when we start to see this price action right through this area right here. Bullish candle coming off this low. Low here, higher low here. We want to see a breakout of the most recent high. That would be in this area right here. And this happens to coincide with the crossover and also the moving averages that are starting to move from being a downward slope to moving upward and starting to slope up. And this continues on. And it also shows itself throughout the price action on this chart, all the way through where the slope of the moving averages, when they get stacked and they're sloping up, this is when we get into our strongest moves. And these little telltale signs of the positioning, the size of the candles, where the candles are in relationship to the overall trend are very important. When we see these gaps right here, you got a gap up in this area right here that wasn't filled. Well, what made you think this gap was going to hold? Well, at least the moving averages are all sloped up. They're moving up. So that says, hey, are we gonna move higher? Our price is gonna move higher. And you can see that we broke out of this high, a nice candle here. This would be a small flag pattern right here. Flagpole, your flagpole starts right down here. This area, the gap is considered part of the pole, and then you have part of the flag right here, continues up, and then what happens again? Then we get another gap up. But what happens whenever this gap up happens? This gap up happens, it pulls back, comes right into the gap, and it starts to move a little bit higher. Now what gives us the indication of where price might want to pull back is whenever you see price move up and you start getting these inside patterns. Whenever you see these inside patterns, that's kind of a heads up that, hey, we might get a reversal. See an inside pattern here. We get a reversal to the upside. This is the inside pattern, but what happens here? This inside pattern is violated, this high right here. So what happens is that we discount this as being an inside bar because it closed higher than the previous candle. Where like this bar right here, you got this one right here. See, it closed inside this bar. What do we get? Rejection. This bar, did it close inside this one? No, but this one did. So when this bar closed inside the previous bar, right here, then we expect higher prices. And we get higher prices until we come back inside another bar. And then we expect prices to reverse. But really, this is very choppy price action, as you can see. There's no real telltale to tell us, hey, we're going to be moving higher. You don't see any strong push. Whenever you do get a couple candles moving in the right direction, then you get a candle that's stalling, and then you get a rejection of prices at these levels back down. Then you don't test the lows here, but then we move back up and we get another double top. And what happens? Price comes right back down to the 21. And then what happens after we get to the 21? Slope is up, slope is up, slope is up, test, test, test. Break of the 21, slope reverses. What do we expect? We expect it to go to the 50 next. Do we have any candlestick patterns that give us an indication of that these lows might hold? Inside bar here, higher prices, inside bar, don't think we're going to move higher. So just watch how these prices are formed. A lot of people don't pay attention to the small candles, only the large candles, but whenever we get these inside patterns, these are indications right here. You got an inside bar that happened here, and an inside bar that happened right here. When these inside bars happen so close together, or even individually, this tells me that, hey, we have a possibility of having price action reject through these moving averages, and we'll start to move down again, which we did. We get prices moving back up, above the 50, which is great. Price moving above the 50, 21's moving down. I don't really like that. I'd rather have a break of the 21 whenever prices are going to be moving up. I'd rather having the 21 looking up than looking down like that. It just tells me overall that, hey, we normally don't see higher prices when we see price patterns like that. Whenever we're looking for moves to go higher, we're not getting this choppy price action. We're getting candlesticks that are stacking up one on top of the other, and we're getting these explosive moves. And then you might get a few bars like this. But then once you get a few bars, then you should get the next move up. And this pattern should continue. You don't want to see these little candles here, and then a big candle down, and then little candles here, and then a move up. And then this move is inside that previous bar. This is just weak and choppy price action. And you can see once the slope of the 21 started to move down, there's a point in time where here, that the slope of the 50 started to move down. 21 was moving up, 50 is moving down. These are stacked negative, 50 on top of the 21. All this price action right through here is all contradicts the structure of the market of where the 21 should be, like it is back here. The 21 should be above the 50, and when it gets down, this pressure here is pushing the prices lower, and all we're doing is looking for those little nuanced candles that tell us, hey, we might have a problem. This is an inverted hammer or a if it's got a little tail, it'd be a gravestone doji. This is just telling us, hey, we might not be making any more higher highs here. This might be it. What's going to happen if we take out the previous low? So it made a low here, a minor low here. Prices came up to this price point here, kept trying to poke through, really didn't do anything. The moving averages were reversed. Price started to struggle. And what did we see? We seen a red bar through both moving averages right here. And then the next day, more selling. Next day, more selling. Next day, more selling. You don't see any green candles. Stay with it, stay with it, stay with it. One big flush candle. Okay, it's going to be supported on the 200 next day. Poked his head above, flush again. Why do I not want to go long here? Because look at the moving averages. Like I said before, when they're sloped down, I don't want to take the trade. We're starting to get a downward shift in the 200. So now you're getting all three moving averages that are all working together to push prices lower, not higher. And if you look closely at the price action, you can see here, opened here, closed down here. This is just indicative of bearish price action. And you can see the width, the distance between the moving averages. Here, greater, greater, starting to shrink, slope starting to flatten, and now it's starting to move up. So when do you want to get out of the trade? There's no reason to get out of the trade if you're working your way downhill and you can't get through the 21. Oh, got to get out, didn't make a new low. Okay, well, if you got out there, if you took your exit here, you see you made this low here, and you're like, okay, it's going to rally back up. Well, what happened next? Well, made another leg down here, and another leg down here. And your final exit would have been when the 21, basically, you can see it tried to make a higher low here. But when you had this strong move up on this candle in the slope of the 21 moving higher right here, then that gives you an idea that, hey, maybe this is a good point where I should get out of the stock. Let's flip to just a shorter time frame. Let me get into like a 5-minute chart and just quickly go through a 5-minute chart and see what we can see on the 5-minute. Because the rules that I apply on a longer term chart, they do the same thing on a short term chart. So let's see if we can see where this price action started to change. Okay, here you go. All right, what do we have here? I'll make this as quick as I can. Opening gap, gapped up, held the gap. What did price action do? Well, it looks like to me that we kept making these higher lows, until what? We get one explosive candle, and then we get a big wick above body. No problem, stay in the trade. This is where I would say, hey, absolutely. And if I was in the trade at maybe at best, my earliest entry would have been down here. But I would definitely want half of this candle preserved here. Once this big candle came down, I would have more than likely just let myself get stopped out here. Because at this point, when you look at this, and then this, talked about flags. This is a flag, and then you get a breakdown. What can we expect next? When we start getting greater than about 50% of that candle being retraced, we can look at prices starting to move in a different direction. Positive, positive, positive. Same thing on a short term, in a long term chart. 21, oh, couldn't hold the 21. 21 switches going down. 50 and 200 still going up. Uh-oh, what happens here? Then we get a crossover. Boom, crossover. We're not making any higher highs. We're making lower highs all through here, lower highs through here, and then we finally get the break. Nice candle break. Move down. Any retracement back to the mean, the 21, is being rejected. Move up, rejected, move up, actually breaks through, but can't get anywhere, can't make a new high above here, rejected down, prices just keep going down, 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 until the point where, again, we start to get a movement on the 21 first. I don't want to take any trades from the 21 into the 50 unless I have enough room between the two where I can profit, which I certainly can't on a 5-minute chart here. So what happens to me is this is negative, this is negative, this is positive. They start to cross, and when they start to cross all together, you can see that you got all these moving averages starting to move in different directions. One moving up, the long term, the short terms are going down. You're waiting for the short terms to get above, and when finally we get to 21 starting to move above the 50, we start to get that movement here, and you start to see the same story again. Slopes moving up, slopes moving up, slopes moving down, flat, up. So when we started to get that launch, probably around here on this candle, that's when all three started to move together. And that's when my mindset says, okay, well, I'm bearish, I'm bearish, I'm bearish, I'm bearish, I'm bearish all the way down here. Okay, we're starting to get up here. We're starting to make a little high here. Now I can start looking at, can we break through this area here? And that'll move us into a change of trend from being bearish to bullish. And there we go. We make a move higher. But just notice that price moves up, retests the 21, moves up, retests the 21, moves up, retests the 21, break of the 21. I'm okay with a single candle break. I'm not going to get freaked out. Oh my God, we broke through the 21. Get out, get out, get out. No, I'm going to wait until the 21. And what's going to give me a key is 2 closes below the 21. And when the slope starts to change from being positive to negative, then that's going to give me a heads up that, hey, maybe the party's over for me. Maybe I need to get out. And where do I expect it to go? To the 50. If it breaks the 50, where? To the 200. What if it breaks the 200? Well, then it breaks the 200, and I keep looking at it as making lower highs and lower lows. Lows, 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 lows here. And this continues on through the pattern. And you can see down here that this is just terrible, terrible price action. Nothing to trade here. So I just want to give you kind of a insight on kind of the way that I look at price action. I try to keep it simple. I look for candles that are going to stick out, that are meaningful. Are they stacking, candles stacking one on top of another? You know, am I getting price action that looks like this? You know, and then all of a sudden I get one big candle and then I get a body here. You know, this is a warning sign for me, indecision. If I get a big tail and then a body here, this is definitely telling me that, you know, the opportunities price action is probably going to get lower. If I see candle bodies where I get into a situation where I get the opposite, a big tail underbody at a low, then that tells me, hey, if I get something like that, candle body, so to speak, like this, coming off the 21, and I get a higher candle, hey, I'm going to start to look at moving to the upside. But I want my moving averages to be my guide. I don't want to just take one candle off move and say, okay, I seen a hammer candle, I'm going to take it. It doesn't work that way. That's low probability trading. You want to put everything in your favor. So I hope this helps. I'm going to talk a little bit more about how to, really read the longer term patterns and get into a little bit more of double bottoms, double tops, more flag patterns. We're going to talk a little bit about Heikin-Ashi candles versus regular candlesticks also. But anyway, I appreciate it. Savvy Trader, have a good weekend, and we'll talk to you later.